welcome. You have tuned into Closing Trades right here on ET Now. I'm Srishti Sharma and with me is Snehi Shah. And Snehi, once again, it's turning out to be a news-heavy day, and I guess one for you, of course, with respect to that gaming
So
bit.
much is happening right today on that front. And Srishti, if you feel like today is news-heavy, wait for tomorrow when the rate rationalization meeting is underway. Because today we only have this online gaming and the cess issue that is underway. But all eyes are going to be on that second day of the GSE GOM meeting tomorrow, wherein slabs are going to be decided. So much is going to happen tomorrow. So, well, today seems like a warm-up for tomorrow.
No, absolutely. Fair points, Snehi. But yes, of course, all these steps that have been taken are, in a way, good for the economy,
Absolutely,
what we have been flagging off. Yes, of course, today is one of such days wherein this new online gaming bill has been introduced. But along with that, like Snehi has been flagging off, tomorrow is going to be yet again interesting day. But the markets, they are exciting too, because for the last 2 days, we have seen that fantastic run-up on the Nifty as well as Nifty Bank. But today, Nifty Bank seems to be taking a bit of a breather right now. 170 points of cut is what we are getting to see. But Nifty 50, that is scaling higher and moving and sustaining above that 25,000 mark as well. What's looking good is actually the breadth of the market. That's quite cheerful as of now. And today, some of those beaten down sectors, be it staples, be it IT, they are making a very strong comeback. And that's really heartening to note that Infosys, TCS, TechM, HCL Tech, Wipro, these are your top gainers on the Nifty 50 side. Add to that list is HUL, Nestle, Britannia. These stocks are doing very well for themselves. But on the flip side, the defense pack is a bit under pressure. A bit of a profit booking from those days highest point is what we have seen, because our experts too did highlight in the morning that the charts as of now are not looking that interesting. Even the fundamental expert did believe that a lot of it is already priced in, and especially with respect to the new order announcement that could be likely worth over 60,000 crores. Nothing much of an excitement is what we are getting to see. Bajaj Finance, Shriram Finance, these are some of your laggards on the financial side. But Snehi, what about the newish tech companies? No stopping there.
Well, absolutely. No stopping for something like a Paytm. You'll take a look at Return, you'll take a look at Swiggy. All of these stocks are doing very well in today's trading session. But we actually have one stock that's slightly beaten today in trade on the back of the news flow that we've heard on the back of this gaming bill and the impact. Earlier in the day, we interacted with Nitish Mittersen of Nazara Tech, and he had to say that there is no impact on the financials on the back of this, but only time will tell. But to understand a little bit more about the impact of this bill, as we understand right now, and the flashes on the bottom of the screen also indicate that there is still debate going on about this bill in the Lok Sabha, and we don't have any final word yet. But let's take it across to Rahul Jain, Director Research at Daulat Capital, to understand the impact and the magnanimity of such a big bill that is underway right now in the Lok Sabha. Rahul, hi, good afternoon and thanks for your time. First up, help us understand the kind of impact that we can expect to see not only on Nazara but also a plethora of unlisted players, because gaming as an ecosystem in India is a huge economy and also a very big avenue for foreign investment. How does all of this play out if this bill is passed?
Yeah, I mean, of course, this is a bit of a shock because this industry is not a new industry. It's been some time, and there are some of the businesses that have achieved significant scale and valuations that run into billions of dollars. And there are very high quality investment that has come into the real money gaming on the private side of the businesses. And if you look at the monthly active user data and other metrics also, it clearly tells you that it's a very popular ecosystem which has been established around the real money gaming side. And there have been historical challenges around what should be, how the gaming revenue need to be understood or defined, and how the taxation should play into it. But now, this kind of a development where it's not about what should be the tax rate, but more about the existence is something which is very, very discouraging for anybody who's part of the ecosystem, right from companies, investor, and various other stakeholders. So this would have a very, very tarnishing kind of an situation for various participants, and that's why it might see a significant amount of expectation coming from the faction that they would also like to challenge this. But yes, it's difficult to conclude at this point that where it will eventually land.
Indeed, coming as a bit of a surprise. And yes, even the players are definitely seeing that impact. But Rahul, one such player within the listed space is, of course, Nazara Tech. The stock is also down. But even today, when we interacted with the management, he was giving us the clarification that on the consolidated front, the revenues are not going to see any bit of a hit. The company, or rather the stake that they have in Pokerbazi, that is actually one of those associate companies, though on EBITDA loss on EBITDA front, that is still posting some loss. But Rahul, how do you see this particular clarification? Is that enough to give or get that confidence back as an investor?
Yeah, if we go to the history of this investment, was made a year ago, and they took a minority stake. And the reason why it was not consolidated even till this point is because of the retrospective element on the GST requests that have come from the authorities, and the clarity that whether those tax liability would be retrospective or it could be from a prospective point of view. And if we go by that liability alone, those are significant liability to wipe out the current net worth of those entities. So those risks around the GST outlook was already there in this business, and that's why it was always seen as an investment which has an optionality and was not seen as an allocation which was driving the revenue or EBITDA estimate in the near future. So to that extent, I would see that even our estimate would not get hampered to that extent. But having said that, it was a significant investment of close to 900 odd crore. And if this bill passes, then of course this becomes near zero, right? So to that extent, I think it's significant from their size point of view. But purely from a reported P&L perspective, it will not have any impact into Q2 numbers or the annual number that they might deliver versus what the street was building for them.
Okay, so that's the take on Nazara Tech's financials, and the stock has taken even more of a dip right now as we speak. An 11.4% cut is what we're seeing on this stock. You know, while we're talking about this company, let's just revisit the conversation we had with the joint MD and CEO of Nazara, Nitish Mittal.
Company continues to be on a very strong growth track. In terms of moonshine, while they are leaders in the space they operate, because they are focusing on growing the business, the company has at this point of time reported quarterly EBITDA losses, and as a share of associate, we took approximately, I think it's between 20 to 25 crores, maybe 23, 24 crores of PAT loss as a share of associate in Q1. So it was not contributing profits even at a PAT level to us, and therefore we do not expect any negative impact on us on the financial operating side.
Okay, so that's a word coming in from the management of Nazara Tech. Rahul, you were clarifying right now that the impact that the company could see in its quarter two financial close to nothing. But in terms of the one-time impact that we're expecting to see, Rahul, how much could that be if this bill is passed? 7% dip that we've seen in the stock today, would it make for a good opportunity to buy, or should one wait till this bill is passed, till we have more clarity?
Yeah, just to measure the impact, I mean, if you see the market cap erosion today would be slightly more than the total investment loss in terms of what was attributed to this towards acquisition of this company. Going forward, it would be more like a book entry because it's an investment where the cash flow is already been made. And if let's assume this goes through, then technically it's just a non-cash write-off entry that would come into their P&L statement. And as I said, it won't change our estimate from a future perspective. Regarding the share price, I think the company in last few quarters are pivoting significantly toward high profitable gaming business and have been defocusing from long gestation opportunities within the gaming ecosystem. And that is what is driving the overall profitability of the business. If they execute well on some of the some of the acquisition that they have done in the recent past, I think they should be in a situation to achieve the 300 odd crore of EBITDA outlook that they have set for themselves in FY27. And looking at that number, I think current valuation offers an opportunity for somebody to participate into this name.
All right, but with this, Rahul, we let you go. Thank you so much for taking the time out and speaking with us. But time now to slip into a very short break. Don't go anywhere. Lots more lined up on the other side.
Presented by Canara Bank. Together we can. Confused by the market noise? Benchmark your commodity trade with Big Mint's trusted price indexes. We know the pulse of the market. Real data, real markets. We are ISCO audited. Our analysts are SEBI certified. Big Mint. Trust the price. Trade with confidence. India's largest price reporting agency.
पैसा लगाना है तो सेंचुरी प्लाई क्लब प्राइम पे लगाओ, डूबेगा नहीं, जलेगा भी नहीं, कोई खा नहीं जाएगा, धोखा नहीं देगा, ऊपर नीचे भी नहीं होगा, सेफ रहेगा, सिक्योर्ड मिनिमम 30 साल का रिटर्न देगा। अब इससे बेटर इन्वेस्टमेंट है तो बताओ। सेंचुरी प्लाई क्लब प्राइम, रहो बेफिक्र।
सर इन्हें क्रिप्टो करके लाइफ सेट करनी है।
कॉन्फिडेंस चाहिए? हाँ सर। डिफ्यूज द बॉम्ब। डर लग रहा है? नहीं आता। इन्होंने सीखा है इसलिए ये कॉन्फिडेंट है। अगर आपको क्रिप्टो में कॉन्फिडेंस चाहिए तो क्रिप्टो सीखना होगा। क्रिप्टो कोच, CoinDCX, लर्न करो, क्रिप्टो करो।
Crypto products and NFTs are unregulated and can be highly risky. There may be no regulatory recourse for any loss from such transactions.
यूं ही नहीं ताज बन जाता है। शिल्पकारों का हुनर और चुनिंदा संगमरमर ताज को नायाब बनाते हैं। कुछ ऐसे ही चुनिंदा जगहों से बस खास ही चुनकर लाता हूँ। कभी कोई समझौता नहीं करता हूँ। यूं ही नहीं मैं रजनीगंधा बन जाता हूँ।
Sir, try berry pulao. Too good. Good, no? Hey, why are you giving him such looks? Ignore tips and use your own mind before you order. Lots of people give unsolicited stock tips. It can be dangerous. Study the company and the risk associated. Invest only after analysis.
An investor awareness initiative by SEBI.
Papa, let's go to the happy birthday, Duda. Duda, I love you. Go, Duda, go. I love my Duda. I love my Duda.
Skoda.
Vikram Solar Limited. We are a solar photovoltaic module manufacturer with 4.5 gigawatts of installed manufacturing capacity. Now launches an initial public offer of equity shares of face value of 10 rupees each in the price band of 315 rupees to 332 rupees per equity share. Bid offer opens on Tuesday, August 19, 2025. Closes on Thursday, August 21, 2025. For risk factors and other details, please refer to the red herring prospectus available on the websites of the SEBI, the stock exchanges, the book running lead managers and the company.
Every single day, someone doesn't make it back home because someone else broke the rules.
Some habits are hard to break.
Until you put brakes on them. They are potential death sentence.
It's time to break the habit. Follow traffic rules and drive responsibly.
Safety is not optional, it is essential.
Times drive, break the habit.
A Times Now Road Safety Initiative.
And then welcome back to Closing Trades. Let's now get a sense of what the market is right now, almost at the day's high right now, 25,075. In fact, inching very closer to the 25,100 mark. We have Dilip Bhatt, founder at Pedigree Advisory, joining us on the fundamentals, and Shrikant Chauhan as well as Nilesh Jain joining us on the technicals. Good afternoon to all of you. First, Dilip, let's talk about the texture of the market today. You know, so much is happening in terms of news flow on that GST, on the GST front, and that Lok Sabha discussion is also underway. But markets are not, factoring in the outcome. They seem to be very chirpy today and at the day's highest point. What is your read-through of the market today? And in the near term, do you think that 25,000 is something that we can hold on to and good days ahead?
Well, I think in terms of the news flow, I think GST has certainly been a good supporter for the market. It has given a strong support to the market. But I think having said that, it's more of a hope and it's more of a long term that as they simplify the GST rates and as the trade-off, of course, is between the loss of revenue and the increase in the consumption. And in the longer term, I think the consumption should go up. I think which is a very fair expectation, which is what market is also factoring in. But in the short run, I think there is bound to be some amount of disruption. And if there is any delay in this implementation, I think we'll see that we are running into a festival season. And if there is some disruption, even in the festival season, buying on the expectation that either the prices will come down and people will start postponing their purchases. So I think all those things are weighing in the minds of the market and the investors at the moment. And not to forget that government has already given a good concession in the last budget as far as the tax is concerned. Maybe that is yet to play out in terms of boosting the consumption and the demand. So now GST is also being rolled out in a way which is very necessary on a longer term basis to do the business properly. So I think all in all, I would say that in the short term, markets possibly will still try to move sideways, in my opinion, because the fundamentals have yet to catch up with the kind of the levels the markets are at the moment, though they are not very expensive. And expecting that this year we are going to grow at 8 to 9% in terms of the Nifty EPS growth. Markets are very fairly valued, and I expect that markets would spend a little time-wise correction. That's what I think. And maybe I think as far as today, and on a day-to-day basis, there is more to do with the news flow that we are seeing, whether it is gaming, whether it is GST. And I think the geopolitical things, as they have made the markets a lot more volatile in terms of the news. And still the checkered flow of FIs is also playing in the minds of the investors.
All right, so that's the take coming in on the markets continue to be sideways, but yes, the markets are not looking that expensive at this point in time. But we also have Shrikant Chauhan as well as Nilesh with us. Very good morning, gentlemen, and thank you so much for your time. But Nilesh, firstly, your take on Nifty as well as Bank Nifty, because for today, Nifty Bank is seen to be taking a bit of a back seat, while Nifty 50 leading it from the front, and as of now, it's over 100 points of gain. Where do you see both these index headed?
Very good afternoon to you, Srishti. Good afternoon, everyone. As you rightly pointed out, the Bank Nifty has been a laggard. In fact, not only today, if you see in last couple of trading sessions, Bank Nifty is underperforming compared to the Nifty index. The good part is that Nifty has given a good breakout today. The much awaited breakout above psychological barrier of 25,000, and also 50-day moving average that was also placed at 25,020 that has also been reclaimed. So the short-term structure looks positive, and the momentum indicators and oscillators have turned bullish. So we are expecting a follow-up move towards 25,200 to 25,250 on the upside. So buy and decline should be the strategy till time Nifty doesn't break below 24,850. So that should be the stop loss, and we are likely to see a strong momentum towards 25,200 to 25,250 on immediate basis. Although Bank Nifty, we are not expecting any sort of a major firework as of now. Looks like more sort of a consolidation, but yes, gradual up move is something that we can expect in the Bank Nifty as well. So overall, 56,000 is something that we are keeping an eye on. If it breaks above 56,000 in the spot, that will be a breakout for the Bank Nifty as well, and then target would be somewhere around 56,500 to 57,000. But as of now, the focus should be on the Nifty index. given the support that we are getting from the IT space, which is looks like has bottomed out. So we are likely to see a momentum to continue in the Nifty index.
Okay, and in fact, Shrikant, I just wanted to take that point ahead with you and talk about the Nifty IT, the top sectoral gainer today, and how, right? Because 3% uptick is what we're seeing on the index just today. Names like Infosys, Coforge, Emphasis, TCS. So it's not only the mid caps, it's also the larger end of the IT basket that's participating in this rally. So looking very balanced. What is your take on Nifty IT, the kind of move we're seeing today, and how much of the short build-up that we had seen on Nifty IT is covered so far? Shrikant, I believe you'll have to unmute yourself, please.
Sorry.
Yeah.
Good afternoon, everyone. So yeah, what you're saying is right. There is like good amount of short covering that we are witnessing in IT companies. Most of the IT stocks, they are recovering also on the back of there is specific meeting which is scheduled in on this Friday in Jackson Hole, and that will decide a lot about the rate cut interest rate path. So broadly, I am of the view that because of that, we are seeing buying interest in the IT companies. Otherwise, there is, we can say some value buying is happening, but otherwise, with a very short-term view, we can take call of creating some long positions, not with a very medium to long-term view, because in the medium to long term, I am expecting IT stocks to underperform. But in the near term, because of the overall momentum has changed in the market, we can see some buying interest, some short covering in IT companies. Otherwise, it is better to be more on the other side of the market. I'm to say there are a number of stocks which are doing well. Like today, we are seeing good amount of buying interest in hotels, as well as we are seeing buying interest in a few auto companies. So I think there we need to focus instead of focusing more on the IT companies.
All right, so that's the take coming in on the IT space. Yes, of course, not just IT, it's FMCG, select auto counters, they are buzzing too, but we'll discuss all of that and more on the other side of the break. Don't go anywhere, we'll be right back with more just after this quick break.
Closing trades is shaping up to be a really good day for the market coming in today. In fact, Aurobindo Pharma, the stock that we were just flagging off on the back of the clarification that they've issued, now down about 4% as we speak. But on the flip side, let's throw the spotlight on something that's doing very well today. And before the break, we were talking about IT stocks that are seeing the momentum across the pack. You have large caps, mid caps, all of them contributing to this almost 3% rally that we're seeing in Nifty IT. Now, despite a subdued performance by Indian IT companies, analysts are quite bullish on Indian tech stocks in the short run. Would this IT trajectory see an upward soon and follow Nasdaq? Because remember, Nasdaq has seen some very good gains in a trade yesterday on Wall Street. So is that going to be spilling over to Nifty for the longer term and not just today? Sharad is here with an analysis on that. Sharad.
Well, the street is replying. You see Nifty IT index, that's up more than 2%. The top sectoral gainer also in the day's trade. And interesting analysis coming in, especially the divergence which we have seen when it comes to the returns. Of course, the Nifty IT index, that's where we have seen the divergence coming in 2023, 2024. The returns, that's on the higher side for Nasdaq. But the change happened in 2025. Let's focus on that numbers. Nifty IT index, that's down 19%. On the other hand, Nasdaq is up 10%. So why the divergence? That's the question. Now, Nasdaq has much focused on semiconductors now, and that's where the weightage has increased, where there's no proper semiconductor play in Indian IT stocks. Big tech aided by AI investments, and earnings also have been better than Indian counterparts. Do remember, the US companies are largely product-based as well, and that is why there is a premium which the US tech stocks or the big tech stocks enjoy. Also, why Nifty IT might become very attractive in short term, that is very important, is short covering is still left from FIs, and we are seeing in the day's trade that's actually playing out as well. FIs are churning and moving from private banks to the IT space, and that is where the oscillation is happening. That'll be an interesting trend to catch up. And if you look on a fundamental basis, the valuations are attractive. They are near the 5-year average levels of the Indian IT stocks in the most of the cases. And last night, an important incident happened where AI-related stocks cracked in US markets. There was a rollback in some AI programs by big tech firms, and that is where the cause of concern is coming, that whether the froth will get cleared in the big tech IT stocks or not. And that's why the under-owned Indian IT space has become attractive for the smart money. Now, where does the problem still remain for Indian IT stocks? Because long-term issues are still there. AI adoption by companies may still affect the billings. There is the issues in hiring trends, and client budgets globally, they might change as well, as there is no certainty, and the companies are also not giving guidances going ahead. Now, service-based companies, which is the Indian pro forma of performing in the IT space, it is a limited product exposure. That's why the valuation premiums are not very rich. We are service-based exporters technically. And which stocks the analysts are most bullish on? TCS and Infosys, larger names, we see 19 to 23% 12-month return potential, and also HCL Tech making it to the list. Also, let's look at the mid-cap IT stocks. Where do they stand? Coforge, Emphasis, Persistence, LDI, Mindtree. Over here, the pick between the analysts is Coforge and Persistence Systems. So for a short-term move, we can see in the IT, and we are seeing today.
Well, indeed, Sharad, we are definitely seeing great moves on the IT space right now. And yes, that's the clear case with AI. The question mark remains, is that a bubble or some rollbacks that are still happening? The case for Indian IT is turning out to be favorable. And after that beaten down move that we have seen on the major IT companies, the stocks are making a good rebound. But along with that, Dilip, let me come to you to have your take on the FMCG basket, because today, of course, like you were also flagging off that the consumption is one of the themes that will definitely take up, and we are getting to see that the staples are now making a comeback. What, as per you, is making them attractive at this point in time?
Slightly, before I reply to that question, slightly on a macro basis, I think one should also look at the sector rotation that keeps on happening in the Nifty, and that also keeps the Nifty alive and kicking. So that's one part. But for FMCG, I've been maintaining now for quite some time. There are 2-3 factors playing out. One is the rural consumption has come back. The urban consumption has still to come back. That is still yet to inspire a lot of confidence. But I think the hope is that even that will come back sooner than later. That is one part. And second, of course, the fact that that overall the volume growth, when it comes back, I think without taking a price cut, what would possibly happen is some kind of operating leverage will still play out, and they'll be able to make good kind of profits. And sobering of the inflation is another factor that is certainly a tailwind for the FMCG companies. But all said and done, I think there is going to be a momentum which we are seeing possibly in the entire FMCG sector playing out over next 3 to 4 quarters. But the caveat over here is almost all the FMCG companies are exorbitantly expensive, without any doubt. Now, if you have to play for the momentum, it's a different thing. But on a fundamental basis, I think still the valuations will weigh in the minds of people, if at all they want to take it on a long-term basis.
So that's the take on some of these FMCG names, and especially the staples basket. Dilip, thanks so much for your time, and good speaking with you today. But Shrikant, coming to you, or in fact, let's get a view coming in from Nilesh on some of these top gainers that are buzzing away in today's trade. Nilesh, 2 stocks on our radar today. Ola Electric, an 18% spike up is what we've seen on the stock, along with the Godfrey Phillips on the back of that cess that is going to be mulled in the Lok Sabha today, over and above that 40% GST, but that stock is doing very well, up about 12.5%. Give us a quick chart check on both Ola Electric as well as Godfrey, and if you're seeing any strength on the charts.
Right. So Ola Electric, first of all, to give you a disclaimer, we did recommend this particular counter yesterday to our client, and we have advised to book profit since back-to-back for the second consecutive session. We have seen a big spurt, and today it's up more than 16%. So it is not advisable to chase the momentum at high level because the risk and reward is not favorable. But yes, the undertone and the structure looks strong, and we are likely to see a further momentum towards 56 to 58 level on the upside, and quite possible that it may test the levels of 60 as well. But fresh longs can be added only on declines. They're about 48, 49 can be a good entry point, keeping a stop loss below 44. it's a buy and decline kind of a structure. Now coming to Godfrey Philip, again a very good setup in this particular counter. The counter is looking strong on the chart, and constantly it is forming a height up and habit formation as well. So yes, it can be added in a staggered manner. We may see a follow-up move to continue in this particular counter, and another kind of a 5 to 10% kind of upside can be seen in this particular stock as well. So Godfrey Philip is a buy at current level and can be added on declines as well. Stop loss should be placed below 10,000, and on the upside 11,500 kind of levels can be seen in a short run.
Can be a buy, but along with that, Ola Electric to book profits. That's what Nilesh has advised to his clients as well. But Srikanth, the other stock in focus today is actually Aurobindo Pharma. While there were some reports saying that the company will be, or rather is in talks with an M&A deal with respect to one of the European-based companies, that's going to be a very large one with like $5.5 billion worth size of deal that was quoted in some of the reports. But along with that, there's also a clarification coming in by the management itself, where they're saying that for now there are no such binding agreements which are in place, and to discuss all these M&As, that's a regular process. But Srikanth, what's your sense on Aurobindo Pharma? Because post this clarification as well, there's been no significant recovery from the day's lowest point.
Yeah, the stock is already down. I mean to say that even if the news is, like we can say, true, then it is already priced in and the stock is available at its 52-week lowest level. It was around some 1500 levels. From there all the way the stock has fallen to the levels of 1000, and currently it is around 1050, 1060. So in case if there is any reversal activity, then certainly we should look for adding this stock, because most of the time whenever there is a recovery in the market, whenever there is a bullishness in the market, or whenever there is a recovery in the pharma sector, we saw there is good amount of buying interest in Aurobindo Pharma, and it's a high beta stock. But at this level, certainly yes, it is better to stay away from taking any specific long bet or short bet at current levels.
Okay, so that's the take on Aurobindo Pharma. Let's talk about some other pockets where we've seen some action today. And Nilesh, before we let you go, just want to get your view on the telecom space. Now, of course, two listed players. You have Bharti as well as Vodafone, but this entire domino effect has started with Reliance Jio taking out its lowest offering, the lowest plan that they offer. What's your sense on the charts of Bharti Airtel and Vodafone? If maybe you're seeing some strength over there, what should the approach be to both of these stocks?
See, first of all, Bharti Airtel has been one of the good stock within the telecom space to be in the portfolio. So it can be added on declines. It's a good portfolio stock at a present level as well. It is trading well above its all long-term and short-term moving averages. So from here, the target on the upside comes somewhere around 2000, 2100. From a near-term perspective, we are pretty bullish in this particular stock. And also from a trading perspective as well, 1900 is acting as a very strong support. So that should be the stop loss for the longs. And it can be added in multiple tranches as well in the portfolio. So yes, it's a buy on Bharti Airtel from a short term as well from a position perspective. Coming to Vodafone Idea, see, we have seen a lot of underperformance in this particular counter. It has gone into extremely oversold territory, but now we are witnessing a strong rebound from the lower levels. So this pullback may extend further towards 7.5, or quite possible that it may test the 200-day moving average as well, which is currently placed at 7.7. So a breakout above 200 DMA is important for this particular counter to witness a turnaround. But as of now, purely from a pullback perspective, it can be played keeping a stop loss below 6.2. It's a trading bet purely from a pullback perspective.
All right, that's the take coming in on the telecom players. But Nilesh, thank you so much for taking the time out and speaking with us this afternoon. Just a few minutes left before we shut shop, with very interesting comments coming in. On the bottom of your screen, you will see that FM told GOMs to work proactively on the GST reforms. FM also assures that 2 slabs of GST structure That's only good for the economy right now, as they say that the government is committed to actually cut the tax burden. And that's what Prime Minister Modi has also promised for a Diwali gift as well, with GST rate rationalization to be at play. And like we have been flagging off, that just 2 slabs will be likely. But let's take it forward and understand with respect to the markets, where are some opportunities that you can still find at this point in time. Let me welcome Sunil Subramaniam on the show right now. Hi Sunil, very good afternoon and thank you so much for your time. And yes, of course, GST and the headlines over there, they are making big moves on the markets and the stock prices as well. But a whole host of sectors that are involved. How do you see this news flow, and any particular sector where you are most bullish on?
So let me look at it this way, right? The GST has been looked in conjunction with the S&P's upgradation of India. I think the two go hand in hand. They came within a day of each other. The reason I'm saying that is that, see, domestic buying support has been strong. Domestic inflows have been strong, and fund managers also been buying. In fact, they've brought down their cash balances from the March high by the June end. So this buying support was, however, not so focused on the consumption space before the GST announcement. So post the GST announcement, obviously the broad range consumption pack has got the attention of domestic fund managers and has had a decent rally. But what I would say is that the real upswing for the market is going to come from the S&P rating as it flows through into a re-rating of India in the hands of FIIs. And this, I think, is the key one, which is because FII support has been lacking. They have been very off and on. April, May, June, they came in. July, again, they started selling. August, they've been selling. So it's a mixed bag from the FIIs. And when they turn over into a positive frame in India, and what's not helped for India has been the valuations, right? So when you're dealing with a reasonably high valued market like India, you need the growth triggers to be clear. And so for me, the GST actually shows the growth trigger to the FIIs for them to come back into India. That's number one. Second, the S&P upgrade means that whenever they put into the model the riskiness of India in terms of calculating how much overweight, how much underweight, or for an algorithmic trading, it decides to allocate money to that market, this rating will make its part, and that should also increase the interest of FIIs. So from that perspective onwards, when you're now investing, I would switch my attention gradually from two things. One is, where are the FIIs likely to come in? And if you see there, for them in the banking space, the IT.
No, absolutely, Sunil. We totally take your point that not just the GST rate rationalization, but coming along was the upgrade on India credit is what we have seen, and that's boding well for the markets. But I believe we have got you a bit on a patchy line. Let us fix that. But meanwhile, let's also put the spotlight on the auto space, because for the past 2 days, we have seen a lot of excitement with respect to the autos. It wasn't just the GST news flow, but along with that, what we have already seen is that the rare earth issue was also seen to be resolving a bit. And we also have the FADA note that has been released, as auto buyers, dealers, manufacturers are scrambling for the clarity on the GST reforms. My colleague Nivedana is here to give us more details on the same. Nivedana.
But as far as the auto world is concerned, and if you're a buyer, it is looking extremely interesting. Also, given the aspect that auto buyers are holding back purchases despite crowding showrooms. Remember, since August 15, sales have dropped sharply as consumers anticipate a GST cut on vehicles, especially small cars and two-wheelers, where tax may fall from 28% to 18%. Now, the Federation of Automobile Dealers Associations are engaging with the Union Ministers for Heavy Industries, that is H.D. Kumaraswamy, as well as Commerce Minister Piyush Goyal, seeking clarity on this particular proposed revision, because sources say going forward, the auto industry is likely to soon pitch the concerned ministry, that is MHI and CIM, seeking better clarity on this proposed revision. Sources suggest that both the ministry may jointly approach the finance minister for resolving or getting clarity on the sectoral issues. Meanwhile, what is really happening over here in terms of the development development is that dealers have urged manufacturers to pause stock inflows ahead of the very crucial festive season, with passenger vehicle inventory already at 6 lakh units. While enquiries have surged, actual sales remain weak. So dealers say only a firm government announcement will lift that buyer sentiment. Industry insiders also have predicted any real sales boost may not come until next year. So given the aspect of what we're looking at and how this will pan out eventually for the consumer perspective as well, that remains to be seen.
Okay, Nivedna, thanks so much for taking us through that. Shrikant, take us through some of these stocks that you're liking from the auto pack, putting the fundamentals aside purely on the technicals. On Monday, we had Maruti Suzuki that was as high as 8% because we had the news flow that China is going to be lifting its curbs on rare earth minerals exports to India. So very big positive for the auto space. But after that, we've not seen much of a momentum coming in auto stocks. And today, in fact, auto stocks are absolutely flat. Two questions here. First up, what's looking good from the auto pack in terms of pure play autos on the charts? And second, if at all you had to pick between autos and auto anchs, where would you be placing your bets?
See, from the auto pack, I would like to go with two-wheeler stocks very first. There we are seeing genuine buying interest. We are seeing buying interest in Bajaj Auto, Hero Motors. They are crossing their immediate highs, and in fact these two stocks were underperforming heavily, but Hero and Bajaj now both have started participating into this entire up move. And the way the stock has fallen, Hero Motors, from the levels of 6,000 to almost 3,000, 3,500, I'm of the view that it is into pullback mode, and the stock may hit the levels of 5,500, 5,600 sort of levels. For Bajaj Auto, there also we have a bullish view based on its technical formation, and it is heading for the levels of at least we can say close to 9,200, 9,300. I'm going to say close to 5 to 7% kind of rally we can expect in two-wheelers. We also like Mahindra and Mahindra. For Tata Motors, we need to wait. We need to see that whether the stock manages to sustain above 700 or not. From the auto ancillary space, yes, Uno Minda looks good. There we are seeing a good amount of buying interest, and the stock has crossed its immediate major resistance level at 1200. So from here the stock can move towards the next levels of maybe 1500, which will take some time, but it's a positional buy. Along with buy on FIEM, FEM India, which is currently around 2080, 2081, and there also we have a target close to 2200.
So a lot of these auto ancillary companies on radar when it comes to Shrikant's preference. But Shrikant, along with that, also help us with your stock specific ideas for our viewers.
Yeah, with a very short-term view, we should look for adding Castrol to our trading portfolio. There we are seeing double bottom sort of formation. The stock can move towards the levels of 215, 220 in the near term, and the stop loss is also very nearby. We can keep a stop loss around 202 for the same. The other stock on which we are bullish is Tech Mahindra, and it is simply because of the activity, the momentum that we are seeing in all tech companies. In the near term, certainly this one was the only sector which was underperforming, and if there is a rally in the market, then we can expect short covering in this particular space. So Tech Mahindra can go towards 1600 levels, and we can keep stop loss somewhere close to 1500 for the same. So Tech Mahindra as well as Castrol should be on the watch list.
Okay, so Tech Mahindra and Castrol, two stocks that have made it to Shrikant's list. Only about 5 minutes or so left of trade. Just let's revisit what the market is doing right now. I want to see particularly the Nifty. It's slightly petered off from the day's high around the 25,050 mark. In fact, we were hopeful of seeing that 25,100 given the way the rally has been today, especially after the midday mark of trade. Shrikant, given tomorrow, we still have the fundamentals weighing that we have that GST rate rationalization meeting tomorrow. So all eyes are going to be on that. Day after tomorrow, we will also be seeing the impact of whatever happens at Jackson Hole later tomorrow. Amid all of these fundamentals at play, just give us a sense on how do you think this would pan out for the technicals, and 25,100. Do you believe that is something that we could hold, we could reach, and in fact latch onto in the near to medium term?
Yeah, very high chances of crossing 25,100, and maybe in the near future we may even see the levels of 25,500. The reason is because now the supports have shifted. FIs have huge short positions, and now there is like very less room left for them to go short on the market. The news flow is positive, and if we go through with the domestic institutional activity, then they are consistently buying into the market. So broadly, I am of the view that we should look for holding long positions with a target of at least 25,250, on which Nilesh also discussed. So 25,250 is the immediate target on which we are targeting, and the next level to watch out for would be 25,500. So in case if there is any correction, any lower opening because of any reason, we should look for adding some long positions. I don't think that the market will break the levels of 24,800 again.
All right, that's the take coming in on the markets right now. But Shrikant, with this, we let you go. Thank you so much for taking the time out and speaking with us. So just a few minutes left before we shut shop. It's been yet again an interesting day for the markets. Nifty has managed to hold above that 25,000 mark for itself.